Thank you all for joining. Thank you, Angel Oak, for presenting this to us this morning. I'll just read a little bit about them. It says, of course, we know that they offer non-QM and specialized mortgage solutions for brokers and correspondents throughout the country. They pride themselves on providing underserved consumers with unique flexibility through responsible loan products when applying for a mortgage. It says their goal is to make the entire process easy and efficient, deliver phenomenal customer service, and close loans as quickly as possible. We all like that. Their mission is to create and foster financial equity through wealth building, homeownership opportunities for underserved individuals, especially the self-employed, through increased access to workforce housing. So with that being said, first of all, we have Larry Mize, Regional VP of Sales here, and he's with Angel Oak, is an expert and reliable consultant supporting brokers and correspondents. Larry has 20 plus years of success in finance and real estate, starting in subprime in the mid-90s. Larry worked at South Star Funding in 2000 until 2005. He then went into retail wholesale with People's Home Equity, and starting from the ground level helped them grow from less than 10 million to over 350 million a month as Vice President Director of Solutions. His expertise in retail, wholesale, mortgage sales and operation, conventional and non-prime lending has helped Angel Oak Mortgage Solutions set the standard as the lender in non-QM alternative lending. His team has helped a significant number of underserved borrowers become homeowners under his leadership. He is dedicated to delivering excellent customer service, top-ranked leadership, and products that sets them apart in the industry. So, Larry, do you want to go ahead, or Moses, do you want to just introduce yourself?
That was perfect. Yeah, I'd just like to introduce my team. You just made me think back how long I've been in this industry. So thank you for that.
Yeah, I know you start thinking, oh Lord, that right there with you.
Yeah. Right. Well, thanks for that. And I want to introduce my team. We have Moises, Bonet, and Jack Stevenson on the call. Moses, if you would just introduce yourself and what you do here at Angel Oak.
Of course. Good morning, everyone. Good morning, Larry. Thank you, Melissa. So my name is Moises Bonet. I'm a regional sales manager with Angel Oak. Been here now. It's going to be 7.5, going on 8 years in the next couple of months. It's a great time to be in the mortgage business. My prior experience, I was a wholesale account executive with Argent in the early 2000s, and so I started my mortgage career in the early 2000s, and it's been a great ride, and hopefully we could share a lot of good information with the team on the call.
Great.
Perfect. Jack?
I'm Jack Stevenson. I've been in the mortgage industry for a few years, but have a family that has a lot of mortgage background. Worked at South Star with Larry for a little bit, and and I'm also an account rep. I'm an account rep with Angel Oak. I'm happy to help assist you guys in finding other ways to build your business.
All right, perfect. So today we're going to just kind of cover basically a little bit about our products, what we have to offer, what non-QM is and what it's not. And then, of course, we're going to show you how to save some deals by using non-QM. And we're going to also probably try to tell you where to find some of these referrals and things of that nature. So obviously, I'm going to start off with Moises here. Moises, can you tell me what makes a non-QM loan?
Great, yes, that's a great question. The whole non-QM thing it's been in the making, right? So over the last 8 years, Angel Oak has pioneered what is non-QM, non-qualified mortgage, and really it's bridging the gap between, let's say, hard money and conventional. Okay, So after the crisis in 2007, 2008, those mortgages, those loan programs went away. But what I've always said is if the borrowers didn't go away, the houses didn't disappear, just the loan programs. So in 2014, Angel Oak started originating non-qualified mortgages, non-QM, and really we've paved the way for homeowners that have been underserved over the last 15 years or so, or less than that. But that's really the gist of what a non-QM is, and this is what we specialize in.
Awesome. Jack, you want to add anything?
Yeah, I mean, it's a different way of qualifying borrowers, and just an alternative, ways you might not have known that are there, just a different way to help you guys and help the community, and help serve the community and figure out alternate ways to help them get qualified for a mortgage.
All right, thanks, guys. That's going to lead us into our next topic, obviously. What programs do we have, and how can they help your borrowers get into homes? So this is Angel Oak's website. It's angeloakms.com. You're welcome to follow with us or go here. And then just up at the top, it shows the programs. If you hover over the program section here, and I'm going to just click on the overview. This is probably going to be always the most up-to-date information. So if you're ever wanting to know about some of our products, this is our website is probably one of the more intuitive websites that you can use, and also always has the newest and latest information about some of the products and programs and everything. So these are going to be high-level overviews, and I'm going to just kind of go around the horn here and show some of these products, and then I'm going to talk to Moses and Jack to kind of dive into some of this. So obviously, one of our popular products is the bank statement program. So I'm just going to pull this up, and Moses, if you could just tell us a little bit about this program and what you're seeing out there and how to utilize this product.
Of course. So the bank statement loan is actually one of my favorite loan programs. And so the bank statement loan originated to help the self-employed borrower that's taking on way too many write-offs. So this is our borrowers that are self-employed, have great credit, have a ton of cash flow, but unfortunately their tax returns just do not work, okay? So the bank statement loan, the huge benefit of it is that now we could use the borrower's bank statements, either 12 or 24 months, either business or personal, but we're gonna go ahead and calculate what the income is gonna be for the file, and then we're gonna do all that work for you. So that right there is just a huge benefit there, where we're gonna go ahead and do the upfront work, research into the bank statements. And so it's a great program. So just going to go very high level. Minimum loan amount, you're looking at $150,000 up to $3 million. One huge benefit about all of our programs is going to be that there is no MI. Okay, guys. So there is no mortgage insurance on any of our loan programs. So you have the bank statement loan up to 90% LTV with a 700 or better credit score. We do require 2 years of self-employed. Okay, we can do purchase, refi cash out, refi rate and term. So we offer 40-year IO. It's just a great program. I'm sure everybody that's on the call has had turn downs where the borrower unfortunately just does not make enough money. And so this is where this program comes in, and it's just a great loan. Right now it's approximately about 70 to 72% of our overall business is bank statement loans. And Larry can correct me if I'm wrong, but I believe there's about 15 million self-employed borrowers in the United States. And we know that time and time again, they definitely fall out from conventional financing because of income or even because of loan amounts.
Right, exactly, Moses. And by the way, guys, this is going to be we want to be interactive with this, so I'm going to just throw out a question about if you guys have you ever closed a bank statement loan, and if you have you done it in the last 12 months? So you should see it pop up on your screen here. We're getting the responses right now. We'll wait a couple minutes. All right, this is probably more in line of where we're seeing. And we've got about 75% of the people have voted. So I'm just going to go ahead and throw, there we go. All right, so I'm going to share this with you. This is probably about what we see for the most part. And you see right here, it looks like 89% of the people on this call have not originated a bank statement loan, and about 11% have. I'm just going to tell you that you have a lot of opportunity here with Angel Oak with some of these products if you haven't done a bank statement loan, because we know you're probably seeing these out there. So, which is great. So,
yeah, What's amazing to me, Larry, is what I see there's the opportunity, right? So those 89% that have not closed a bank statement loan, how many turn downs have you had? That borrower, and I always like to say this over and over again, is that borrower is going to go down the street to somebody else, may go down to one of your competitors. And so that loan is going to come to Angel Oak. And so why not take advantage with our programs that you guys have at your disposal? And so, you're leaving money on the table. And these loans, again, are not that hard. They're not difficult. Again, we're going to do all that upfront calculation for you. We're going to go ahead and review the bank statements. So upfront, within 24 hours with Jack's help, you're going to know if you have a loan or not. So we're not going to string you along for a couple of weeks or, once in underwriting, absolutely not. So within 24 hours, you're going to know if we have a deal or we don't, and we know exactly what the income is.
And just the amount of purchasing power on top of it, the amount of purchasing power they're going to get with this, like if they're writing off taxes and it's tax season, borrowers making $200,000, maybe they're showing $40,000 of income, claiming it personally. I mean, that's $160,000 of taxable income they're saving for this loan product, right? And yeah, rates are going to be a little bit higher, but at the same time, the amount you're saving on that taxable income is far greater than that rate.
Great point, Jack. Hey, Moses, just go ahead and just touch on, since it's the same product, go ahead and just touch on the 1099 program, if you would.
Of course. So we also offer a 1099 program, which actually mirrors the bank statement loan. And so all we're looking at is going to be the borrower's 1099 documentation, which they receive at the end of the year. So we're not looking at a huge subset of bank statements. We're looking at either 1 year or 2 years of 1099. And again, it's going to mirror the same guidelines. So you would collect the 1099s from your borrower, call it 2021, 2020, and then we're going to go ahead and do that income calculation for you. Again, we're going to do all the hard work for you. And so, again, within 24 hours, we're going to button up the income and let you know what the borrower qualifies for. So you know up front.
Exactly. That's a huge benefit, especially if somebody's going out shopping for a home. You kind of want that income solidified before they're out house hunting. Last thing you want to do is assume that they qualify. But yeah, we do that in the beginning. And guys, anybody on and girls, anybody on the call, if you have questions, be sure to use the chat box to ask questions, and I'll address them as we come along, and I'll have some probably at the end that I can cover as well. Okay. Just going back to the overview here, I'm going to jump on an investor cash flow. Jack, tell us a little bit about the investor cash flow and how we're using that today.
Sure. So the investor cash flow obviously is for the way we look at it is to see if borrowers are going to cash flow on investment properties. So what we do is minimum loan amount $75,000. We're going to look at the fair market rent value and compare it to the mortgage. And if your fair market rent value is greater than your mortgage, then you're going to qualify for income purposes. We're not looking at DTI, employment history. We're not looking at income. We're not looking at tax returns. We're not looking at any of that stuff. So if you're a first-time rental home buyer, this is going to be great for you because you don't have to have any rental history. If you're capped by Fannie and Freddie at 8 properties, you can buy your 9th with us because we're a private investor. You can go past the amount because we're not associated with Fannie's and Freddie's books. Now, I'm trying to spitball here and think of anything else. 40-year IO is available on this program. Max LTV, max loan to value is 80% on this loan program for purchases. And yeah, I mean, anything else, Larry, that I need to cover on this? Up to 5 loans on our books is what we like. You have to have a primary residence. And typically, we want to have clean mortgage history on this product because we're not looking at your DTI, employment history, income, or tax returns. So that's kind of what we're looking for on this product.
Moses, you want to add anything to that?
Yeah, of course. Guys, what I want you guys to keep in mind is this is a true no-income doc loan, okay? Just exactly the way Jack said it. We're not looking at tax returns. We were just looking at the borrower's credit profile. As long as it meets the guidelines, we have a loan. We can vest title in an LLC, so that is great. We can have up to 2 or 3 managing members on an LLC. No limit on total number of properties owned. So if the borrower has 20, 30 properties, he wants to do the 21st or 22nd, we can do that. Unfortunately, we don't do condo hotels, but we do warrantable and non-warrantable condos. So that is huge, okay? Again, investor cash flow, it's a very easy loan to get done. as long as the rent comes in. And so we do positive cash flow. Okay, so it's going to be over the 1-to-1 ratio. We could do break even, and we also do negative cash flow. So that means that the property, the mortgage is not covering what the rent is. Okay, guys. So we also do those as well. It's an easy loan, and so what we see is a lot of investors that perhaps had gone hard money at one point and have a substantial portfolio and now need to get away from that 9, 10, 11, 12% interest rate. And the rates on investor cash flow are amazing. They're in the mid-5s, mid-6s, and so it's just a great program.
Yeah, I would just say this, we do have a no DSCR product right here. And typically where you're going to see that is on seasonal properties. If some place may be cash flowing pretty heavy during the seasonal months, it may not cash flow in a 12-month period. So that's a great product for that. And typically our LTVs on these, our average LTV is about 72%. So it's, and these actual loans, these scores average above 740. So that is a huge difference between the two. So.
And I see a lot of agents go on this product, right? So your partners,
a lot of realtors,
clients, yeah, your clients. I see a lot of them wanting to invest in some equity. So I mean, this is a perfect product for them.
And something to throw out there that a lot of people, we do see a huge trend moving that way is multifamilies. Okay, so 2 to 4 unit properties. It's a great product. Max LTV would be 75%. Guys, it's a great program, and if you're not using it, trust me, you are missing out.
That's right. I agree. That's a great segue into our foreign nationalist investor cash flow. So if you want to just touch on the investor cash flow, because it is the same product. Correct, Jack?
Yes, that's correct. It fits under the ICF product. 70% LTV for purchases, 65 for cash outs. And you have to be a citizen of another country and have a work visa in order to qualify for this product. You cannot have a U.S. citizenship though for this loan product. But yeah, 12 months reserves, must be ACH. Yes, and no foreign or U.S. credit. Exactly, no credit needed for this loan product. So
this is truly somebody that lives and works out of the country that wants to buy a property here in the United States. Is that right?
That's correct. Yep.
Okay. We see this a lot in some of the I call them sand states, where there are people want to kind of move into a second home or buy an investment property, so we see that a lot, especially sand states, like I said. So, but it's a great product. We get asked about this product a lot, and we do ask them to have a U.S. account so that we can get those payments made on time. So, good. All right, then I'm just going to continue to move on here. Let's talk about the platinum jumbo here. Moses, you want to lead into this?
Of course. All right, guys. So what we also have is the platinum jumbo product, which is just missed prime jumbo. Okay. So this is going to be where your borrower unfortunately has had maybe a credit event within the last greater than 4 years. So let's say that the seasoning from 4 to 7 years, which would be Fannie Freddie. This is that loan for this borrower. Okay. So again, there's no MI. We can do up to 95% LTV at $2 million, and there is no MI. It's a great product. Now, when we're talking about platinum in the next program that we're going to talk about, which will be Portfolio Select, these two programs are fully documented loan programs. So we're going to look at 2 years of W-2s, tax returns, pay stubs, but it's a great alternative when your borrower unfortunately does not qualify because there's some type of credit event or there's a seasoning requirement like on a BK or foreclosure, deed in lieu. Again, we do non-warrantable condos, we do purchase money, refi cash out, refi written term. That is across all our programs, but it's a great program at $2 million, 95% LTV, and there is no MI. That right there is the selling point.
And we can also throw second homes on these loan products as well. The Platinum Jumbo, Portfolio Select, and the bank statement. We can throw second homes on all of those. Yep.
This same product, we do offer a 1-year tax return program also. So we see that on a lot of people that just start up their business. Maybe they're only 2 or 3 years in, and it takes them a year or so to start really making that profit. So sometimes you'll see somebody that can qualify on the 1-year tax returns versus 2. So we do allow that on this product. And again, this product is the same product for the asset qualifier. Moses, you want to tell them a little bit about this?
Of course. So the asset qualifier is similar to maybe you've heard out there in the industry, an asset depletion program. So this is going to be our version of that. So it's asset qualifier. It's max LTV of 75%. We do owner occupied. I believe we could do second homes on a case by case. Definitely no investment, but owner occupied and second home, we can absolutely do it. And so pretty much what you have to keep in mind is that we're going to look at the borrower's assets seasoned for a minimum of 6 months, and we're looking roughly about at a minimum at $500,000. Okay. So it's a great program when a borrower, unfortunately, has a ton of assets and is currently unemployed. And it, again, it hinges or mirrors off of the guidelines from Platinum. So it's going to be that higher tier borrower with a 660 or better credit score. And so, again, it's a great program when you have a borrower that has a lot of assets. On the asset qualifier, minimum credit score would be 700, max LTV of 75. There's no income, no employment, and there is no DTI. Again, we're just looking strictly at the borrower's assets.
Perfect. Thanks, Moses. Looks like we have a couple questions coming in also. Before I get to some of the questions, I do want to throw one more poll out there just to see if anybody has closed a DSCR loan, and that's their cash flow loan. So if you would look at the poll, and it looks like the answers are coming in. And again, this is a huge opportunity for you guys with this product. Okay, great. And it looks like we got a majority of the votes in. And right here, we're at 91% have not done a DSCR product.
Wow.
And yeah, right. So definitely a great product to know. I will say this about the products that we're talking about. These are definitely door openers, is what I call them. And these door openers is, instead of you walking into a realtor office just talking about, you have great rates and great service and things like that. This is a differentiator for you guys to be able to walk in some of those doors and do what some other people are not doing right now. If 90% of the people out here have not done a DSCR loan, you guys have a huge opportunity right now to walk in and get some of this business from realtors out there right now. So keep that in mind, and we'll talk about a little bit how you might be able to market yourself here in a little bit. So I'm going to jump into the Portfolio Select, and Jack, you want to talk a little bit about Portfolio Select?
Yeah, sure. So it's so this is a good one for credit issued borrowers, maybe had a credit event, maybe, if you had a bankruptcy, Chapter 13, it's 2 years from the file date as long as it's discharged prior to the application date. Chapter 7, 2 years discharged from the application date. So maybe if they were struggling with that, or DTI, minimum loan amount starting at $125,000, by the way. DTI is 40/50 on this loan product. It goes up to $3 million in loan amount. And to note, a lot of these loan products, the bank statement, Platinum, Portfolio Select, it's not like a conventional loan product where it goes up to 625 and then all of a sudden you have to go into a jumbo loan. These products are pretty widespread, where you start at 150,000, go up to 3 million. This one is 125, and you go actually to 2.5 million. So it's just a different way of an alternate way is what we like saying, of qualifying these borrowers. But this is more for your credit issued borrowers. And typically, if you just come to me with a scenario, I'll be able to put it under the right loan product based off of the parameters of the borrower.
Great. The only thing that I'll probably add to this is typically with these full doc deals, we call these 2-for-1s typically, because a lot of these loans that you're looking at, like the Portfolio Select, anything that has a less than your traditional timeline on your BK short sale and foreclosure, you're going to have an opportunity once they hit those timelines to be able to refinance them into an agency type product. So, this may be a temporary patch in the interim, just to get them in the house, and then they can get the traditional financing once they hit their BK or short sale mark. So keep that in mind, that you may get 2 loans out of this, and just do what you do best and be your mortgage consultant and kind of guide them along the way, all the way through. So I think that's a great asset to have as well, so you got a borrower for life. So for the most part, that's majority of our products. And we've touched on a lot of these, obviously, but just like Jack said, probably the best thing to do is if you do have a scenario that falls out of the boxes, you just reach out to an account executive. And you can go to our homepage and you can find the account executive. You can click on Alabama, and then we have Larry and Jack here. So, and you can just contact Jack, and we'll also pass out the information later on after the call. I did get one of the questions about what's an estimated rate with a 750 score, a credit score of 25% down. I'm going to show you guys probably one of the most resourceful tools on this website, and it's called our non-QM quick quote right here. And you don't need a login for this, and you basically just can go to this website, and then depending on your relationship, you typically we're dealing with brokers. So. And then, Moses, if you want to just, I think this is a great one, so I'm just going to run this one. And it was a loan amount of 600.
Okay.
Well, she said 600. I'll put 500 in and then she said 75% with a 750 score, which is right in line with what we are looking at. So I'm just going to put 75%. We're going to leave it at 1. Getting a little feedback. And I'm going to put 24 months. There's no difference between 24 months business and 24 months personal. Between 24 months and 12 months, there's an 8th difference. So, and as you can see, this is the par rate right here. So, and then again, it tells you what LTV was requested, what your max LTV is available. It gives you your par rate and how long you need to be out of the BK. Just read these small little notes right here. Just make sure there's nothing else that's going to pop up. And Moses, if you would, want to give me a scenario on an investor cash flow so we can kind of show them what that looks like.
Sure. But one thing to highlight, Larry, is that the pricing engine is live 24 hours a day, 7 days a week. So that means if on the weekend you're meeting with your realtor or your borrower and you need to log in, you can't get in touch with Jack. You just go to our website. There's no login needed, and with 4 pieces of information, the system automatically just starts generating the rates for you. So you see how easy that was. So now we're going to go ahead and turn it over and switch from a bank statement loan to an investor cash flow. So Larry, the scenario was a loan amount of $350,000. And we have a credit score of 725. And this bar is coming in with 30%, so 70% LTV. And so income documentation would be investor cash flow. And so we're going to change the occupancy to investment. And just with the click of that, we have rates. So imagine that. So a 30% down, a no income doc loan, you're looking at a rate in the mid-6s, is a 30-year fixed, and it gives you some additional information, 6 months reserves. And so any adjustments to the top, so let's just say we wanted to do an LTV of 65 or 75, in either direction, you'll see that the system will change very quickly on the fly. So in this case here, 65 or 70, your bar is going to get the same rate.
And if you move to a bank statement program, you say, hey, I've got bank statements on this guy. For an 8th difference in price, it's a lot easier to go on a no-doc product.
Mm-hmm. Yeah, and so our portal is live 24 hours a day, 7 days a week, and we can change the property type. And so we want you guys to be using this because this is what we use. All the AEs, this is what we use, and so it's a great engine.
And then this is where you're going to go if you want us to review a file. So you've got that par rate, but let's say you're going to go borrower paid. That's at 6.625. You can click right there. You can scroll to the bottom, select the option, and then it's going to take you to a place where you can upload your 3.4 right here. If you don't have a 3.4 available right now, you can just click next and upload a 1003. And then you're going to put in your account executive. Let's just put Jack in here. And then you put in your company information, your loan officer information, NMLS, and you put all basically your contact information. And then from there, you can upload that 1003 in credit. Again, if it's a bank statement deal, you would have a place down here for your bank statements. And then you answer these simple 3 questions, and then you just hit submit. Then now we'll go to Jack. And Jack, you want to just tell them what our turn times are on something like this?
It's 24 to 48 hours it depends on bank statement versus ICF, but typically 24 to 48 hours for review. I'll just follow up via phone call. Yeah, and I'll follow up via phone call, email, whichever one I reach first.
Okay, perfect.
And guys, what you want to, so pretty much what we're doing is just a prequel, right? Pretty standard prequel. Jack is going to be your DU, all right? Instead of running DU as you would with Fannie or Freddie, where you have an automated system, you're actually working with live human being. And so Jack's going to give you a call and go through the scenarios. There's something that needs to be restructured. And so this is running DU, but we just manually do it.
That's right. If we do have an exception desk or what I call a deal desk. So if something falls out of the box and you may not see a product, don't let that hesitate you from asking. We do make exceptions on loans. We use a common sense approach. It does have to make sense. If you're maybe sometimes a few points short of your credit score on getting that 90%, be sure to ask. It doesn't hurt to ask us. We use a lot of compensating factors to make those exceptions. So looks like we had a couple more questions. Let me pull these over. One of the questions was, can you use 2 sets of bank statements from 2 businesses on the bank statement program? Moses, you want to answer that one for us?
Sure. So yes, we can definitely use 2 sets of bank statements as long as the the businesses are independent. So you have, let's say, a borrower that has a car wash, and at the same time, he also has, let's say, a nail place, or let's say a barber shop. So these are 2 different independent businesses, and the bank statements run parallel to each other. We can absolutely use both of them. Now, if there's any type of commingling or transfers back and forth, we may not be able to do it. But again, Jack's going to go ahead and let you know what we can do and which account may have the most amount of income.
And then we got a question of, can you have a W-2 borrower as a co-borrower? Jack, you want to take that one on the bank statement program?
Yes, we can. We can. And we're also not looking at tax returns. We're just looking at W-2 pay stubs for it. Yep. We can add co-borrower income on it.
Here's a question. What proof of self-employment documentation would you allow on the bank statement program for someone that doesn't have a license or corporations or an LLC, like a house cleaner or a lawn maintenance or a handyman or auto dealer? Moses, you want to take that one?
Of course. So what we're going to require would be either a CPA letter or a third-party tax preparer. So it could be a CPA, it could be an accountant, or it could be just a third-party tax preparer that's going to go ahead and let us know that this individual, this borrower, has been self-employed greater than 24 months, their percentage of ownership, and if there's any expenses associated with the business.
Perfect. Great. And it looks like we got a couple questions. What's the average turn time with Angel Oak on underwrite and commission clear to close? Typically, we've been 15 to 20 business days on those. We try to strive for a 24, 48-hour turn times on every step of the way, going to underwriting conditions and things like that. We had a lot of rollover from last month. We had one of our largest closing loans ever. So turn times are taking a little bit, but they should be back pretty soon. And then same different question is, do you offer a lock and shop for purchase transactions? No, you get the pre-qual, and then once the borrower goes out shopping for a home, they'll have to check current pricing just like conventional for the most part. So good questions.
Oh, great questions.
So the last thing that I really kind of touch on is marketing flyers, how to kind of market yourself. Once you get set up with Angel Oak, you can go to our website. Moses, if you want to just kind of lead this and talk a little bit about the marketing flyers and how they can use these.
Absolutely. So I definitely recommend all of our broker partners, loan officers, to go in and go into the marketing portal. We have an amazing marketing team that has set up all these flyers that are, the way I call it, they're high definition, 4K, in color, and all the work has been done for you. So we offer anywhere between 10 or 15 different flyers. The great thing is you're going to set it up once and you're going to set it and forget it. And so you're going to put your picture on there, you're going to put your logo, and then you're going to fill out your NMLS, email address, all your information. And so what you're seeing is our flyer branded with your company logo, your information, and it's just, the work is already done for you. Okay. So here's coming up here. So we have Sovereign Lending Group. It's on the top left-hand corner. And so once you set the first one up, all of them, the information will flow over. And so you can go ahead and print these out. You can use them as mailers, email them to your realtors, email them to your borrowers. I mean, they're just, the work's already done for you. If you're
Yeah,
not
like
using it again, you're really missing out.
Yeah. And again, this is a differentiator. You can go in and put your logo and everything in here like you want, like we talked about. But it's the most important piece. Make sure you have your compliance at the bottom of the marketing slide.
Yeah, so this is going to have, again, like I said, in full color, and so you don't have to remember the guidelines. So you have there, kind of high-level bullet points, and so the work is already done for you. How great is that?
Awesome. Great. Anything else you guys want to add? That's for the most part. We've covered a lot of this information. I think the other thing, somebody asked, are we doing non-warrantable condos?
Yes.
Yeah, you want to kind of walk them through on what we're looking for that? Jack, you
want to take it or I'll take it?
Either one. All we're looking for is we actually have a condo questionnaire that we need completed. We look at that, and then that is completed by HOA, and that's what we use to qualify. We don't need a ton of different condo docs like Fannie and Freddie require. We just require, and Larry's pulling it up right now, it's on our resource and documents, and we need that complete, and then that's the only thing we're looking at for unwarrantable condos.
So on that point, guys, what I urge you to do is go ahead and get the condo questionnaire up front. It's the same. It's the same difference as when a borrower is trying to buy a single-family residence. They're going to go ahead and get a home inspection. At least here in South Florida, they get a 4-point wind mitigation report. And so the same thing with the condo questionnaire. You want to know, or the borrower should want to know, if the condo project is in litigation, if there's any issues, if there's problems with the reserves. And so if you get any pushback, let them know that this is a very crucial piece before putting that EMD down. Again, it's $150, $200 depending on the HOA, but you definitely want to get that condo questionnaire up front. There's not many, it's a 2-pager, it's about 15, 20 questions, but definitely urge your borrowers to go ahead and get that up front. That way you know if we have a deal or we don't.
Yeah.
And I have a handy-dandy condo guide been using, telling you what we're looking for and basically tell you what's acceptable, and we have some ineligible information on here, so we can definitely pass this out.
Yeah.
But definitely go to our resource pages. Our resource pages has all the information that you probably need. Everything from the condo questionnaire, and then when you start going into submitting loans and requesting disclosures and locking your loans, we have these training guides, and if you and there are 2 to 3 pages typically for each one. If you don't like to read, you can watch TV and watch a little video on how to do it. So either way, we have the support for you guys to be able to get the training right here. So and then we have a little picture if you ever need the live chat to help if you need someone immediately that you can work with. So, but other than that, that's really about it for the most part. Melissa, you have anything else you want us to cover today?
No, that sounded really good. I do the marketing flyers. It is labeled under marketing, or do we go into the resource? I missed that part.
You have to have a login and be approved with us. But if you, I see some people I see some familiar faces on the call here. And if you have an ID, then basically if you have an ID, you're going to go to the login page, and then you'll log in, and then you have access to the flyers once you log in.
Okay.
And it's right here where you click on login. I have an awesome ID or an awesome AE ID, and it's basically right here. But once you log in, then you simply just go into the marketing portal here. And there's other marketing information. I don't want to get too deep in, but there's your flyers. We do have presentations. So if you guys are going out to do a realtor presentation, we have these right here that you can go out and brand your information on these realtor presentations, so you can go out and talk about our products with your.
And I can also present. I can also help present on those too. I've done that before. Just pose as a loan expert for one of your firms, just to discuss the non-QM space.
Yeah.
Typically we don't mind joining if you are having a call or with somebody. We just try not to let them know where we work. We work for you because we don't want realtors calling. We want to call you for the most.
Right. I think that's all. That's a lot of information to absorb, and it looks like your website is really, really informational, so that's a good thing.
Yes,
Just
ma'am.
a matter of getting in there and figuring it all out and, traveling through it.
Right.
Yeah, thank y'all all so much. If there's no more questions, but thank you too for being a part of AMPA, and we greatly appreciate that for sure.
We appreciate the opportunity, and we're proud to be a sponsor with AMPA. You guys are awesome.
Yes.
Love working with you guys. Y'all have a great base of people in your network, and even though I'm not able to come to everything, I definitely enjoy when I do come to them. You guys
I see your face there. I see you when you're there. Yeah, and I do appreciate all the support. We certainly do. So,
all right.
If we need anything, we can reach out to you guys, and hopefully you will see some benefits from this, and we do appreciate it.
All right. Well, thank you guys. Y'all have a great day, great rest of the week, and happy Easter. Have a good one.
Same to you guys. Thank you.
Thank you.
Uh-huh.